Hi, very good evening to all of you viewers, particularly our pioneer constituents and residents who are tuning in this evening in our monthly installment of Connect at Pioneer. Yeah, as you know, we run this Connect Pioneer series on a monthly basis, particularly now during this safe management measures, and of course, in a way, a more heightened alert. We are conducting a series of sessions. In the past couple of months, we had talks on, not just solar energy like last month, we talked about solar. And of course, we also had in March, being International Women's Month, we had a series or a webinar on matrimonial rights. But tonight, this evening, a very, very, very important topic. As you know, all of us are navigating this entire pandemic, very, very concerned about jobs, skills, cost of living, and how are we going to survive the next normal, so to speak. So tonight we have with us Dinesh. Thanks, Dinesh, for being a part of Connect Pioneer. Dinesh is the co-founder and the editor behind Dollars and Cents. In case many of you not aware, Dollars and Cents writes very, very useful articles, bite-sized articles. Thanks. I read them too. So, and I'm sure many of you have heard of Dollars and Cents and getting a lot of sense out of Dollars and Cents because there's a lot of useful information in bite-sized format, whether through their Telegram pages or through their various social media postings as well. So a big thank you to Dinesh and for joining us this evening. But before that, I hope all of you are snugly watching this either through your smart devices or even desktops or even iPads. But more importantly, help us to like and share this, whether you're watching it through the Pioneer Community Facebook page, Dollars and Cents, or on my Facebook community page. And please like and share, because I think the information that's going to be shared this evening by Dinesh and in our chat later on will be useful, enriching, and fruitful for each and every one of you as you navigate the next normal. And tonight's session will be broken in two parts. The first part will be Dinesh of course, sharing some useful tips on this very, very important topic, very close to many of our hearts, stretching your dollar. Particularly important during this time when there's a lot of uncertainties, a lot of unevenness. You've heard the economic reports just come out yesterday on how we perform in the first quarter, and of course, labor market reports coming out, in the coming days ahead for the first quarter. And looming in front of us, a lot of uncertainties, a lot of ups and downs, a lot of unevenness, and of course, now we're in heightened alert, many of you working from home and having to operate indoors. And very, very important to see how best we can manage our finances and stretch our dollar to the max. Particularly useful for many of our pioneer residents. Many of you are professionals, managers, executives, and technicians. I think you know Dollars and Cents, you know us, and we are here in the community to pick the brains of Dinesh and of course for him to share some useful tips for each and every one of you tuning in, including for myself as well. So continue to like and share. You can post your questions, because besides the first part of the session where we're gonna have Dinesh share some useful practical tips, the second half will be a question and answer session. We did a poll prior to this event, so we're gonna share a bit about the poll findings, but as well as take some of your questions. So if you have any questions, please do post them in the comments lozenges or postings on our various community pages, as well as social media or Facebook pages. And we will try our best to entertain and answer all these questions where possible within the time limit. So thank you for spending this evening with us. And I will now hand the time officially over to Dinesh from Dollars and Cents. Dinesh.
Thanks, Patrick, for the very kind introduction. So I hope to take you guys through what Patrick has mentioned, stretching your dollars. This is a topic that was told to me that is something that we want to cover, and I tried my best to put it down. Hopefully, it'll be useful for everyone at the session. So for a start, moving into the slides, just to give you guys a little bit of background about Dollars and Cents. So Dollars and Cents was first started in 2012, and I first started it while I was in school as well. And eventually, I went full time about 2016, and from then till now, it's been a pretty good ride for us. What Dollars and Cents does, we write about, as Patrick mentioned, bite-sized financial information, and we cover all financial pillars of everyone's personal finance lives, right? So we cover spending, savings, we cover investments, policies, property-related stuff. So anything under the sun to do with your personal finance, you will probably be able to find it on Dollars and Cents. Also, like Patrick mentioned, we do run a lot of our own social media pages, so you can join us at Facebook. We're also live on Telegram, we're also on Instagram. So do join us on whichever platforms that you think or that you typically tend to consume. So moving into our slides, the next slides. Next. Okay, so I just picked up some of these interesting stats from the web sources, right? And if you look at it, this was published, I think, recently in the first quarter of 2021. If you look at 2020 stats, the median income in Singapore fell for the first time. Median household income in Singapore fell for the first time in 5 years. In fact, I took a look a little bit further back as well. In the last 20 years, median income only fell in 3 years. And these were very pertinent years, or very important years. 2002, where there was the tail end of the dot-com crisis. 2009, obviously, most of us who are just in the workforce today, around my age, would have just encountered the GFC, the Great Financial Crisis, and obviously the COVID-19 related pandemic crisis. So we can see that household incomes has been on an upward tick, except for years that are really very, very devastating to the economy. And in the second part of the slides, you can see that the worst hit were actually the lower income households. They tend to be a lot worse off, especially in this pandemic, because I guess they're probably the ones who can't really work from home as well, while the rest of us maybe can do our jobs from home. Possibly. I mean, these are just some reasons, and maybe later we can take some of your questions and discuss even with Patrick further reasons why this might have been the case. Next. Okay, so this slide also goes to show that within very tough years, the government tries to do their part as well. I think last year was really unprecedented, right? There was close to $100 billion spent. Singapore dipped into its financial reserves. And you can see that all households in Singapore actually receive some form of government transfers. And this is really was really required during certain points of time. And the interesting part about this also mentioned the lower income households, the smallest households were most affected. You can see in this chart, they were also the households that were most helped. And this shouldn't be a surprise. But also what's more interesting is that all households got some form of support from the government. And last year was also very unprecedented in a sense that aid from the government came very swiftly. And this year we've seen maybe a little bit of a more targeted support to various sectors that are impacted. So when you see like, F&B sector, you don't allow dine-in anymore, they get a very targeted support. Same for gyms and studios. And these are just things that I've noticed, right? The gyms and studios can't open, they also receive very targeted support. Whereas on the other hand, certain industries or certain businesses such as the retail and several others who are able to continue functioning, they may not get such swift support measures handed out to them. So from my opinion, I feel that this year there's a very targeted support being delivered by the government. Next. So based on this, knowing that we're not just going to be handed money or handed support so freely this year, we need to look out for our own personal finances. We need to be very prudent with how we spend our money. And at the start of the discussion, we mentioned that we're going through this topic of how to stretch your dollars. I think it'll be a stretch, no pun intended, to say that these tips or these things that I'm going through next are only for pandemic years. I think what I tried to do was put down stuff that we should all think about, whether in good or bad years, but they become a lot more important, especially during the worst years, where we think about personal finances a lot more also, and we're more impacted or affected by it. Next. Yeah, so I want to cover all the pillars, similar to Dollars and Cents website. I want to cover all the pillars. So for the first one is like spending and saving. This year we need to be a lot more prudent on. I think everyone's belts have been tightened a little bit, mine included. And one thing that a lot of people or a lot of online sources that you just Google and go and read, one rule of thumb you tend to read is that you should save 6 months of your expenses or 6 months of your salary in emergency funds. So I just went to pick out this you can see this red circle, right? And if you can see, it's a bit far for me. So just to let you guys know, I think in 2020, the unemployment rate was about 4.2%, and it's come down a little bit in 2021. But you can see that it's been a year, right, since the start of 2020 Jan to 2021. And so what I'm trying to say is that maybe 6 months might not be enough for some of these people. If they just had 6 months in their emergency funds, 1 year later, or the second half of the 6 months, it would have run dry already, and they would be personally plunged into maybe a personal finance crisis. And this is also why I think the rule of thumb is just a rule of thumb. It shouldn't apply to everyone. And you can see that emergencies can and do happen. And once it hits you, there's really no way to save more beyond those 6 months, right? Once you're already plunged into the crisis. So what I think is that to be extra safe, and this is what I do personally as well. I'm not trying to be prescriptive to anyone. I'm just trying to tell people, what I tend to do is, I think 12 months is a better buffer, especially since I can already see from statistics that 6 months may not really be enough. So I try to keep more than 6 months, and that should maybe give me a buffer to find a new job or find another career to enter into if I really need to do it. So yeah, that's just about having your emergency savings as a backup for yourself. Next. The other thing that this pandemic has really taught us is that we can actually survive, or we can actually live with very little luxury. So last year, really no one went on holidays, right? Last year, really no one went on cruises. No one, we ate out a lot less for sure. Maybe we ordered Grab food or we ordered delivery a little bit more. But we can see that we can live without these luxuries if we really need to. And I'm not trying to say we should or we shouldn't go with or without luxuries. So what I'm trying to say is that it is possible. And where possible, we can tighten our belt. And this also gives us extra funds to play around with, put into our emergency funds, save a little bit more, invest a little bit more. We have a lot more play room with our funds once we start thinking about the luxuries that we don't actually need to spend so much on. One thing that I used to do is that when I first started working, I used to track every dollar, where it went. And I did quite religiously, actually, to the point that I think certain people are getting annoyed every time I whip out my phone after dinners and key in how much I spend. But I think in the initial years of my career, right, this really taught me, or this really told me where I was spending every single dollar every single month. And I did this for about the first two years, I think, of my career. And this really gave me that grounding. So I knew that, where I was spending. It didn't mean that, I need to cut away certain portions. It doesn't have to lead to that, but it just tells you exactly where your money is going. Once you understand where your money is going, you can make that decision for yourself, whether you think you're spending too much in certain categories. You think you're spending too much eating out. If you don't think you're spending too much eating out, it's fine. You don't have to cut it, but at least you know where that money is going. And this also leads to like the later part of your years. You don't want to have to whip out your phone every day for the rest of your lives to track every single dollar, right? Once you have this grounding, you kind of know where your money is going, and it really, you really know the values that you want to live your lifestyle, the lifestyle that you want to lead. And so what I did after those first 2 years was I tracked broader figures. So I tracked like maybe a net worth. So this can be like a quarterly or yearly kind of track, and just to see, are you better off this year in terms of your total net worth, or are you worse off? If you're better off, you're kind of doing the right things. You don't know exactly what you're doing or where you're spending each dollar, but you're headed in the right direction and you're still on path or on your plan. It's only when you see maybe your net worth go down, and that's where you start to take a maybe deeper dive again into where your money is being spent. So that's just how I manage my money today compared to like the first few years. And I think that for anyone who hasn't done it, even if you're later in your career, there's no shame, or there's no need to avoid doing that. You can still track money. just to see where you're going, where you're spending, and you can later stop doing that. It's not as though you have to do it for the rest of your lives. That's something that's really helped me, and I think something that I try to tell people to do it so that they know where they're spending each and every dollar, at least at the start. The other thing is that, like this article at the bottom of the slide shows, core inflation versus lifestyle inflation. I think lifestyle inflation is something that we can control, right? So that just means when you get a promotion in life, when you get pay raises, you don't raise your lifestyle in an equal amount or even more than that. What you try to do is you try to spend as much as you're comfortable with. Again, I mean, I don't like to be prescriptive on like, you shouldn't spend any of your wages or your increments. You should just go into savings. I don't think there's any hard and fast rule, right? What you can do is, maybe think about whether you should be upgrading your lifestyle first, or should you be building maybe your savings or your investments as well. This is a decision that is going to be different for each of us, but it's a question that we need to ask ourselves. Yeah. In the next slide, we talk about the 6 to 12 months of emergency savings, right? Since we're supposed to save, or I am saying let's save more than 6 months, there's a lot of money actually being put into, for many of us, the banks. And we all know that the bank interest rates today are not very good, not very high. So another thing that we can think about doing is, try to earn a little bit more, try to squeeze a little bit more returns from the excess cash that we have as well. Rather than earn 0.05% from the banks, which give you like a really good liquidity, you can just withdraw tomorrow. Try to think about putting a little bit in there and the rest of it into maybe safe investments. And what I mean by safe investments is not the stock market. Obviously, the stock market is very volatile. There's also products nowadays like cash management accounts. There's also Singapore savings bonds that give way higher than the 0.05%. Plus the liquidity that you achieve or you benefit out of it, it's not greatly hampered. Most of this allow you to liquidate your funds within a month or less. So have that maybe 1 to 2 months of emergency savings in liquid cash, and the rest of it can really be put into slightly higher interest earning tools or products. And another one is like actually the high interest rate savings accounts. Most of the banks have their own version, and if it works for you, I mean, why not? Sometimes they have a cap, so the cash management tools and SSB can come in after that. Yeah. In the next slide, we'll probably head into so the first few slides were savings and spending. This slide talks a little bit more about how you invest and the revenue streams that you can earn. So you see that image at the bottom of your screen, right? This is the actual stock that I owned through the 2020 crash. You can see that it was on a steady uptake, and then about Feb to March 2020, it crashed. And this crash was about 50% or even more than 50% of the stock price. And then you can see that it gradually recovered. So what I'm trying to say with this is that we need to stay invested. And staying invested just means that we need to be able to ride out the volatility. And one way that we can ride out the volatility is really to have sufficient backing. So we need to be able to hold our investments. How we're not able to hold our investments, just some examples. If we take too much leverage, we may not be able to hold on our investments during times of like a sharp plunge. We may be forced sold, or we may be asked to top up to our investments. And if you can't do that, then we'll be forced sold, right? The other thing is that if you can really go to bed at night with a 50% plunge, that's another hallmark of like staying power or holding power. If you can't stomach that kind of risk, then stocks maybe is not something you want to put all your money into. So that's the other thing about having needing to stay invested. If you find yourself being unable to sleep at night, maybe you don't have that holding power. Maybe you should invest a little bit less into stocks and a little bit more into safer investments. So that's just like another question that you need to answer for yourself. All of us have different risk appetites. Maybe mine was a bit higher, but also there's reasons why you can increase your risk appetite or risk tolerance level. If you have a safety net, you can take a little bit more risk with the other remaining funds that you have. But those are questions, again, that you need to ask yourself, and each one of us will have different answers. So my answer is really not something that will answer the same question for you. And the second part of the slide also talks about continue investing, right? So during the plunge, if you were someone who invests every month, you would have benefited from the plunge, right? If you invested. But if you didn't invest during the plunge, then you didn't actually get to enjoy the maybe underpriced valuation of the asset at that point of time. And you can see it took maybe a good part of the second half of 2020 to actually recover above the initial price that it plunged from. But if you had invested every month after that, you would be like enjoying a lower price, lower average price. And that, if that's your strategy to invest every month, you shouldn't stop it. You should continue doing it. Because no one can, I mean, maybe some people can, but I believe no one can time the market, right? So if you can't time the market, what you can do is just invest regularly. Personally, again, just to share, I think this session is also about sharing like my thoughts on it. What I did do during that period of time is that I invested. I tend to invest whenever I see like a 10% drop in market prices or the benchmark market, so the S&P 500 broad markets, maybe even STI. So when I see a 10% drop, I tend to invest like another lump sum. And I did do that. But unfortunately, again, that wasn't enough, right? It plunged another 10% after that, and I did invest another 10%, another lump sum of my money, sorry. But even that strategy wasn't perfect. It didn't just drop 10 to 20%, it dropped 30 to 40% sometimes for different assets. And I didn't actually invest at the bottom. Again, I argue that no one really knows when the bottom will come. As long as you have that strategy to invest during good and bad times, I think you're putting yourself in a position to succeed. Yeah, the next slide. Here we really talk about, apart from investing, we should also think about growing our income in other ways. So other ways just means side gig. So at the start of this presentation, I was saying that I was working in 2012 actually, and I was actually working on dollars and cents during 2012 to 2015, 16 actually. So this really was a side gig for me. Other than the fact that it wasn't really giving me any funds, I was actually paying to continue working on it. But yeah, it actually gave me a lot more skills in a different unrelated or complementary type of business that I eventually made into my career today. So you can think of side gigs, if they give you like a few extra $100 each month, that can go into additional luxuries, can go into additional savings, additional investments. You can choose. I mean, with more money, obviously you can choose where to put it. No one's going to force you to spend it in any way. But more money is always better than less, basically. In the second point, upgrading your current abilities and learning new skills. And that's really come to the forefront during the pandemic, right? Because a trend in the jobs market right now, you have to be tech savvy, you have to be digital savvy. Everyone's talking about IoT, right? The Internet of Things. And if you're not going to be able to have these skills, then you're going to find it a little bit more challenging to get the jobs that you actually want to get also. So you need to constantly think about upgrading yourself, improving. And my co-founder, Timothy, right? He wants, or he still says it to our colleagues. If you find yourself doing the same thing that you were doing 1 year ago in your job, you've probably stagnated, and you probably want to look into why that happened and how it shouldn't happen in the next 1 year going forward, right? You don't want to stagnate. Once you stagnate means you're not learning anything new, you're not adding any new skills. And again, this is a very personal thing, right? If you're doing the same thing in your job, but you're actually started on a side gig, maybe you're not that bad off, but you need to also ask these questions of yourself and have that answer. If your answer is that yes, I'm doing exactly the same thing I'm doing last year, then maybe your job maybe is at a greater threat than other people who are doing vastly different things from what they were doing last year. And the third point really is investment income. So the more you invest, the more you probably will be able to earn out of your investments. And that's really something that many people think about for their retirement, which is something that we're going to in our next slide. Yeah, so this is probably one of the last few slides. When we think about investing, we need to think about whether our retirement plan will still be in track. And this is what I'm trying to say on this slide. So for example, let's say I was about 64 in 2019, turning 65 in 2020, right? And that is my retirement milestone, just anecdotally, okay? And just at the time where I'm about to cash out of my investments, the market took a 30-40% dive in valuations. If I was fully invested in stocks, this is not going to be really great for my retirement. I may have to rethink my retirement entirely. Obviously, in hindsight, we know the market has recovered, but what if it didn't as well? This will put your retirement plans at total threat. So what you need to do is always have a retirement plan in mind, right? You might want to maybe gradually invest in less risky stuff. Another story that I can share with you is that a really close contact, a close person to me, had invested in commercial property a few years ago. At that point, it was a really good investment. A little bit savvy as well. He had some money. He was able to invest in it. The returns also was not too bad. So he actually thought this was going to be his retirement plan, right? When he retired, he can just get, I think it's a Singaporean dream actually. You just own an investment property and then you get a rental income. I think all of us probably have some form of this dream in the back of our minds. Yeah, he's an elderly person as well. Not so elderly, but he is in the retirement zone as well, range as well. And today, he can't entirely rely on the income alone. The rental has significantly fallen because he invested in really commercial, right? If he was invested in maybe residential, wouldn't have been so badly hit. So again, when we think about investments, diversification, quite important in there. Hard to diversify when you invest in property in Singapore because it's a costly investment. And if you were just to rely on his rental income, his whole retirement plan probably changed, right? Because you probably will be able to tell that the demand for commercial properties today are a lot lower, and if you can even rent it out, you probably get a lower rent. So this person's entire retirement plan might have to change if he was just relying on rental income. So that's another way to think about your retirement. You shouldn't just be relying on one source. You shouldn't just be relying on the economy doing well. You should be thinking about diversification. You should be thinking about your worst case scenarios as well. And this really brings us into CPF Life, right? Which is kind of the worst case scenario for everyone's retirement plan. So throughout our 3 to 4 decades, people usually start working for guys after I'm 25. Then we really retire based on the current retirement age, which is going to move to 65 pretty soon. That 40 years. So 30 to 40 years is kind of like the working years that we have. While working, we obviously contribute to our CPF every month. So a portion goes into our OA, SA, and MA. SA is the special account where it's usually like reserved for our retirement. After putting our money in it for 40 years, this will probably form the base of our retirement. And if we think this figure, we can really go to CPF website and calculate how much this will compound into, right? And if we calculate it and we think, hey, that's not enough. And Dawson Zenz writes a lot about these things as well, so you can read some of our articles. But if you think after calculating that, hey, this is not an amount I think I can retire on, you can always tap on other schemes like, the RSTU, retirement sum topping up scheme, top up a little bit more into your CPF so that you have a larger nest egg for your golden years. And this really, once you, and at the start, or somewhere in the midpoint of the presentation, I was talking about being able to increase your risk tolerance. So once you have that safety net secured for yourself, you know that you are going to get that $2,000 each month when you retire. You're able to take a little bit more risk because you know that you have your bases covered. You have your worst case scenario already thought about, and then you can maybe take a little bit more risk with the rest of your money, a little bit more free play. Again, it's not being prescriptive. It's just something that logically, it makes sense because you know your worst case scenario is already, and so you can take a little bit more risk. Yeah, and I think this is probably the last slide that we have on this topic, if I'm not wrong. Yeah, and just to segue into really, because I'm talking to Patrick and we want to hear a little bit from what his movement is doing as well. I thought of looking a little bit into the trends of the local job market, because really to have to secure your personal finances, you really need your job to be able to build that safety net as well, right? To be able to build your CPF life, you need a job to contribute for that 40 years. To build your investment pool of fund, you need to earn that money from somewhere in the beginning stages of your career. So I think we can't escape jobs. All of us have jobs. And in the next slide, I'll just put up a little bit about the trends in the job market, or at least the trends that I've been noticing in the job market. Yeah, so I think these are stuff that everyone can get online. I've just captured it and put it up. So Q1 in 21, I mean, the job market has been improving. Hopefully, this continues despite the phase 2 heightened alert measures. I think, like Patrick mentioned, the government also put out the forecast. They probably remain, or they're stating that it remains at 4 to 6%. So maybe this shows that they think that we will be able to ride it out, and hopefully we will see better improvements in the following quarters as well. Point two, 7 in 10 job vacancies did not use academic qualifications. This is probably a move in the right direction as well. People maybe, or companies thinking a little bit more about your experience. It also shows the importance of networking. In a pandemic year, it's been really hard to network, but we need to step out of our comfort zone then to think about how networking is still relevant to us. And that second point really shows it, right? And the third point, I just put a little bit of snapshot of the top vacancies that I captured from another report. I'm not so sure if everyone can read, but the top few are nursing jobs, healthcare. I think this is no surprise as well. There are a lot of demand in that sector. Again, I'm not saying everyone should start learning medical or health related skills, but in the other places, you can also see like digital, tech, IT, and these are skills that are relevant as well. So, I mean, it's not being prescriptive. Again, you can see that the top vacancies are there. And if you're looking for a career switch, these are probably the top sectors you want to look at first. And the last point, obviously, because of working from home being such a huge trend in 2020, I also think that, there might be a bit of a risk of jobs being farmed up to cheaper regions around us, cheaper countries around us. To be honest, dollars and cents, we're thinking about whether this makes sense as well, especially since we want to have overseas presence. And we really need to think about how we value add as employees to our employers sometimes. If someone overseas not being in Singapore can value add a little bit more, then we are at risk, right? So that's why we need to upgrade our skills. We need to provide that benefit to our employers that someone in a cheaper country cannot provide.
Yeah, absolutely. I think Dinesh, thanks Dinesh for sharing with us the past half hour some tips. Yeah, but before we pop into the second segment where we'll share a bit more and also take some of your questions, I just want to have a caveat here. It's a Connect Pioneer webinar. We're not providing financial advice or professional advice to each and every one of you. We are not professional advisory staff. So do take necessary advice from professionals in the financial sector if you decide to do any investments or any deposits or go into any of the markets which Dinesh has alluded to. So this is purely Dinesh's view and my view this evening, and sharing our personal thoughts and our personal analysis and assessments and of course forecasts for what's happening right here as in the midst of the pandemic. But back to the topic earlier, I think very, very important, jobs. I think we all know that if you have read many of the articles as well as many of the tips and advice, particularly during this COVID pandemic period, where besides heightened alert, we see a very, very uneven recovery of the economy. Yes, MAS came out publicly, MTI just yesterday say we maintain a forecast for this year to be 4 to 6% economic growth. Frankly, I was a bit bullish earlier in the year, but what's happened in the heightened alert does change my perspectives as well. And therefore important because even as we are talking, some in these sectors who have managed to ride the wave, managed to pivot and transform, managed to find, the blue ocean, so to speak, and made inroads into new opportunities, have actually done better or done well. However, because of the travel bans, restrictions, and all this so-called minimal traveling and trade, travel, tourism, we also see with us many impacted sectors. For example, I always say that the very, very impacted sectors we know, aviation definitely, because of the travel restrictions, we can't fly. I have friends who work in the aviation sector. I feel for them. Really, many of them, some have not even flown for the past year or so. So aviation, and aviation has a lot of downstream services. For example, aerospace, people who maintain, repair, and overhaul many of these planes are also affected. And of course, travel and tourism. We used to have lots of tourists coming into Singapore in the millions. But here we are, not just Singapore, I think nobody is left unscathed or unscarred. In the region, in Southeast Asia, we are very strong in tourism, but this has taken quite a toll on many of our economies. And of course, besides travel and tourism, we have, of course, hospitality. Because many of hospitality sector are very, very dependent on travel and tourism. And of course, business, movement of businesses, as well as many of the MICE events as well. So also quite a number of sectors have taken a toll. And I can't emphasize more the need, like what Dinesh mentioned earlier about the need to, reskill, upskill, multi-skill, something which I've been, quite passionate about, including myself. Recently went for some Skills Future program. I just got my results this afternoon. I passed. Phew! Because apparently there was a requirement. If you don't pass, you have to pay back all the government funding. So and the passing mark was 70 marks. I think I barely scraped it. But keeping current with some of the skills and knowledge, information, very, very important. I think besides investing in different products, in different kind of investments, in different markets, investing in yourself is very, very important. Investing in yourself, in your family, I can't emphasize more the importance of investing in yourself and your family and your loved ones. Very, very important. Besides time, energies, and of course resources. Because I think in this economy, in this uncertain outlook, things are so volatile, so fluid. Who would imagine certain sectors, certain highly skilled sectors are now made redundant? Who would imagine that some new discoveries or new developments have resulted in new kind of jobs for many people? So it really blows your mind sometimes. And even before COVID-19, we talk about skills. The half-life of skills is 5 years. So all of us need to really, stay really relevant and resilient. Really, the new skills relevant to the new jobs, particularly the in-demand jobs, which Dinesh alluded to earlier, and of course resilient to the changes, because it's going to be changing and so uncertain and so volatile moving ahead. But I think Dinesh shared the last slide on some of the hot and cold jobs. This is a very important topic, because actually that's something even prior to COVID-19 Singapore has been facing, what we call structural unemployment, or for want of a better term, structural mismatch. It's a mismatch of jobs and skills and people. In what sense of the word? Well, we actually have, if you look at some of the various web portals, job portals, we actually have quite a sizable number of jobs. You alluded to the number of unemployment gone up, and actually our vacancies have gone up. But unfortunately, we have the same number of people, but unfortunately there's a mismatch. We have the same number of people, we have the same number of jobs, but we can't seem to get it matched properly. Oftentimes, it's because of skills. Many of these jobs, healthcare jobs, are on the rise, for sure. Essential services, definitely. And of course, ICT being very digitalized, and many companies trying to go into e-commerce and pivot. So definitely a lot of demand for this, but also means that all of us need to pick up the necessary skills. I mean, everybody can't be a software developer, but at least know the ability, have the capabilities and have the knowledge to know how to operate them, in their workplaces and in the domains that they are comfortable in. But actually, Dinesh left us with quite a good point when he ended and said, any of these jobs, because the world is now even more flatter than ever, and many of these services, because of restrictions, we are forced into the circumstance. We can actually procure some of these services from overseas. Actually, I have one interesting story to share.
Yeah.
In fact, last year during the COVID-19 and the circuit breaker period, there was one SME which I spoke to. They used to serve a very, very localized, very community market. And they were selling certain products and services for the local community in Singapore. So it's micro SME selling services. So during the pandemic, they had to pivot. They started posting the things on social media, online, on digital space, and started having their own websites as well. Okay, of course, no choice. They had 2 months to do it, so they got it all up. And lo and behold, a few months later, some of their product services, because it was quite tailored and useful, particularly in these pandemic times, they started getting orders, inquiries from all over the world, not just in the region, but also internationally. So from a very, very local, very, very community kind of like target market, they suddenly had their services in high demand by partners across the globe.
Yeah.
So I think it's an example of how we can leverage on technology, leverage on the digital space to really stay relevant with the times. So this is my take. And
I think you're right. It's really a two-way thing also, right? Anyone can work for Singapore companies, but anyone in Singapore can work for overseas companies at the same time.
That's right.
Yeah.
So much as we can procure services from overseas, we can also provide our services overseas as well. So that's a win-win situation as well. And I just want to allude to a short survey which the Labour Movement has just. I come from the National Trades Union Congress, and of course, I'm a co-chair of the Professionals Managers Executives Task Force. In fact, we just did a survey in the last 6 months with about 8,000 professionals managers executives. I know many of our pioneer residents are PMETs, so this will interest you. The top 2 concerns actually on their hearts, their minds, when we surveyed them were actually 1, job security, 2, employability.
Yeah.
So I think it resonates exactly quite well with what you shared earlier. I think, previously, I remember prior to COVID-19, it was always like talking about, where do we find the next opportunity? Where's the work-life balance? But today, as we are talking, I think more and more of our fellow PMEs are more concerned about job security and employability. Something very important. That's why we talked about skills. We talked about saving for a rainy day. Particularly important. Yes, there are a lot of government schemes. I wouldn't go through the whole plethora of government schemes this evening. You know them. They are all available on the various web portals. And if not, please read Dollars and Cents because they do have snippets on some of the tricks of the trade or some pointers and practical tips and advice for each and every one of you to maximize your dollar or stretching your dollar. But also, actually, I wanted Dinesh to give me some help here because he actually did a poll with his Dollars and Cents team just before this tonight's session. So particularly, getting a sense from the ground of what's keeping them at the top of their minds, particularly during this pandemic. So shall we just push out some of these findings and we can chat about it?
So we asked our audiences, right, what are the things that concern you most about this current climate? And I think not surprisingly,
it resonates quite well with the survey which I did together with my team. With 8,000 PMEs, they're talking about jobs, security, and employability. And here you are, top of the minds, wages not keeping up with cost of living. So please use some of the tips tonight. I said we do not provide financial advice. Please engage a professional. But otherwise, do read some of the useful information. I think it is time and age where you need to be well read before you go into anything. Don't depend on the grapevine. Don't depend on what you read on social media. Please do the necessary research and seek professional advice before entering into anything. But definitely, all these points are wages not keeping up with cost of living, retrenchment, pay freezes, unfair hiring practices, access to training. All these concerns jobs. I think it seems like everyone is very concerned about jobs and job security, and really. My heart goes out to many of you. Some of you are tuning in who may have some uncertainty or may still looking for a job. There are various job portals, there are various outlets. Maybe we have E2I, we have Workforce Singapore, and the various platforms. If you are in Pioneer, we have our local legal employment employability at Pioneer, every Saturday morning from 10 to 5 in the afternoon, you can actually drop by our one-stop center here in Frontier Community Club, where we are powering this session from, where you can meet a employability coach to give you some tips and advice to navigate. If you do have the skills, we would recommend you to take some of the programs subsidized heavily, like many of the programs, including the recent one I went through, also heavily subsidized, particularly because I'm a mature worker. And really pick up new skills for some of these jobs that are available.
Yeah. I think it's available at many CCs as well.
Yes,
right?
that's right.
Yeah.
So actually now, because of the web, I think everything is available quite comfortably. You can even look at it from your smart devices. And yeah, so maybe we had a few more questions, so let's flash the next one.
Sure. So this second one, I think we went through a bit earlier, right? And you said both of us were a bit surprised by the outcome of it.
Yes. So unemployment insurance, everyone's very keen about unemployment insurance. Just to to corroborate to a certain extent, we did focus groups as part of our PME task force the last 6 months, including the surveying 8,000 of the professionals and managers executives. Unemployment insurance did come up as one of the ideas and suggestions, and I'm glad to see mental health support up there on the charts, as well as the job matching services. All these are very, very important, and unemployment insurance is a sticky topic. I think coming from the labour movement, we are not shutting it off or putting it down. We are exploring the options and what's available, because I think yes, unemployment insurance, but like in all insurance, someone has to pay the premiums. So if you have any thoughts, like how much premiums you're willing to pay per month, minus all the contributions by various parties, but basically yourself, how much are you willing to pay as premiums per month or per year? If you have some thoughts, please put in the comments. I would love to hear from all of you. And of course, how long you want to be paid. Trigger events we know, involuntary unemployment, for example, retrenchments. And of course, how much is enough? Because different countries have different practices. I've scanned different jurisdictions like Denmark, Japan, Canada. Different countries have different ways of rolling out their unemployment insurance. So is it something that you're willing to pay for it, and how much are you willing to pay for it? So do drop your suggestions and your thoughts in the comments portions of our various community pages, and we will get back to you. But any thoughts on Danish unemployment insurance? In your research, in your write-ups on dollars and cents, and having engaged many of the PMEs, is it very forthcoming, or a lot of people feel very strongly about this? Or is it a mixed bag?
Yeah, I think it's kind of mixed, right? From the people that I do speak to, maybe I don't speak to enough people like you, 8,000 PMEs. I don't have access to them, but from the people I do speak to, I have to say I'm a bit surprised. Unemployment insurance doesn't really come up as often or in such a huge way.
Maybe because it's a pandemic now.
Correct. Yeah.
Maybe
so
perhaps people who are responding have
well.
lost jobs.
Yeah.
Oh, yeah.
Correct.
But this is definitely something we'll pay close attention to, especially the PME task force. So there's one more question we put up. Is that okay, that's all. I actually, so now we have go to the Q&A portion. We only have 10 minutes left. So I've already gotten quite a bit of questions. I was actually watching our Facebook community pages and some of the questions that came before this webinar. But maybe I start off by one. I saw Julia earlier putting a question on, if you have some spare cash now, Dinesh, spare cash, not a lot, but some spare cash, what should we invest in?
I think it's a bit of a tricky one, right? So like you mentioned, this is not tips or advice. All I can do is say what I will do, right? I would think about parking it in a relatively safe investment. And personally, what I will do is that I portion a small percentage. Again, this is personally for me.
Yes.
You should talk to your own financial advisors. I park like 5% of my wealth, or 5% of the amount that I want to invest into a bit more riskier equity stocks that I want to put in. And this gives me, the balance that I think I can sleep at night with. So some into stocks and some into much more risky.
But recently, I don't know whether you read the newspapers, more and more people are putting monies into their CPF accounts.
Yeah, I did read that, and we even covered that. I think it's really good, and I think the reason why I'm able to take more risk with cash on hand is because I know that I have this safety net that I'm building, and I'm also putting a lot of funds into that, especially from my wages. A lot of fund money goes into that, and then you can contribute additionally.
Yes.
And once you do that, you know you're building your safety net. So for me, I know I'm building my safety net towards retirement, and I can have a little bit more free play with the cash that I do have.
Yeah, I mean, fortunately now in Singapore we've implemented the MediShield Life. So in a way, hospitalization charges will in a way be managed expediently, in that sense of the word, because it's everybody's on board of it. But more importantly, retirement adequacy, something very important. I mean, that's why many of us have put aside savings, put investments, so that we have enough for our old age. Because today, as we are talking, our life expectancy has gone up quite a bit compared to 2 decades ago. And I'm sure many of us tuning in here may be living into the 90s or even hundreds in time to come. Because as you know, our life expectancy now, depending on whether you're male or female, is in the 80s, in the region of 80s. One of the highest life expectancy in the world, particularly in Singapore. So we are living longer. So definitely, as you know, also, in case you're not aware, retirement and re-employment ages are going up.
Yes.
Yeah, I mean, there's a plan for it to be raised to 65 and 70 by 2030. But next year it's going to go up. I think government has said it publicly to 63. Now it's 62, 63. And then, of course, re-employment age to 67, 68. So take note of that, because that plays an important part. And because also means whether there's enough savings for your retirement, and also to allow you the opportunity to work if you want to or if you need to. Because many of our parents and grandparents are living much longer. And many of, I know, at least many of my friends are having their kids much later. And then even though they are in their mid-40s, 50s, their children are still young and of school-going age. So very, very important to save both ways.
No, I mean, personally, I always think the retirement age is also a number. I mean, you can continue to work after the retirement age even, or retire earlier.
Correct. Yeah, that's right. And let's take a few questions because time is really running short. Okay, how can we start investing our monthly savings with a low risk return? Monthly savings?
Yeah, so I mean, there are a lot of products that
you talked about Singapore savings bonds.
There are already a lot of products structured to monthly investments or monthly savings, right? So Singapore savings bonds is one of them. I mean, if you think they offer too low of interest, you also have to realize that you need to take on higher risk to get higher interest.
There's no there's always a trade-off.
So I mean that a lot of the local brokerages, DBS, OCBC, they do have their monthly investment plans.
Yes.
A lot of the robo advisories out there also have monthly investment plans now. So there are no shortages of options. But when you want to go in, make sure you go in with the eyes open. That means knowing what you're investing in.
Have full knowledge. That's why I was giving everyone a caveat or warning earlier. Please, don't listen to the grapevine and then go into something it's high risk. You never know. You might lose everything. So do be careful and take professional advice and be well read before you go into anything.
Yeah.
Like recent, there's a big foray in cryptocurrency.
And it's just a drop, right?
Yeah, Bitcoin. I read about it last week.
And if you can't stomach that risk again, then maybe you shouldn't.
That's right. So please be careful. Over and above that, I thought I should help the police to do some messaging as well. Frankly, in the last couple of years, because of e-commerce, because of us going into the digital space, there's a lot more online scams. So do be extra careful of online scams.
I think we took sorry to take out a bit more time, but we took a look at the kinds of crime being committed in Singapore, and we realized that the real physical crimes are decreasing and it's going all online digital.
That's right. Yeah, I think partly because now everyone has a camera, so I think physical crimes have gone down significantly. Well, that's the boon of having everyone having a camera and everyone acts like a CCTV of sorts. But also means that many of the crimes are now moving into the virtual space where it's the dark web, so to speak. And really, please be extra careful. We've conducted a series of programs, and we're going to embark on some of them in the coming months to advise everyone, not just Pioneer residents, but many of our residents across the community to look out for this, to be extra careful, particularly when deals become too good or returns are too high. Well, please put a question mark and everything. Well, we'll take one final question before because the time is running out. I've been told by our volunteers to watch it. There's this university undergrad that said, no, I'll be graduating from university in 2 years' time, and currently have more than required to pay off my student loans. So what you recommend to manage, first, the funds required to pay my tuition loan, and second, any excess funds beyond that. I suppose this person has a lot of pocket money or has been doing some side gigs.
Yeah. I mean, it's not a bad thing to have more money, as always. But I would again say that where you get these loans from. Is it from your funds from mom and pop bank? Then it's kind of interest free, right? So you shouldn't really pay it off. But if your interest is a lot higher than that, then why?
So I think it is from a bank.
Yeah. So maybe you see around the range of like 3-4, maybe you're slightly higher than that, 3-4%. So while you're studying, maybe you don't have to pay. But once you graduate, you have to start paying for most of these student loans. So if it were me, I personally wouldn't pay it off immediately. But once I have to start paying the interest, maybe I would.
Yeah, that's good tip, especially interest. It's borrowing interest is high, so yeah, very possible. And you also read from the latest release, many Singaporeans are also paying up their mortgages or the CPF loans for their houses as well. So that these are advice. Well, time is running out. We can't take all the questions, but I thought a good opportunity, and really I would like to thank Dinesh from Dollars and Cents this evening for coming all the way here at Connect Pioneer to join us for this Monday webinar, and really helping and giving us some tips. So do follow Dollars and Cents. I'm following them on their Telegram as well as their various postings. Very useful, bite-sized. As I was just sharing with Dinesh before this evening's program, and it's very informative, and you can really read them on the go and on the move. And sometimes it doesn't take more than 5 minutes to read some of the. And I give kudos to Dinesh and team for crunching some of the more difficult stuff, the tables and the plethora of data, in a granular way to present it in a simple format. So continue your good work.
Thanks, Patrick,
so that we can make
here also.
Yeah, great. And thanks for making time for us and for Pioneer residents. And to end this evening's webinar, I thought just chime in on certain useful information. I know many of our Pioneer residents are professionals, managers, executives, and technicians. And many of you tuning in because it's Dollars and Cents and talking about stretching a dollar, maybe PMEs, fellow PMEs. So do take note, the labor movement where I come from, National Trades Union Congress, we actually pivoted quite a number of years back to look at after the interest of professionals, managers, executives. Many people don't know, they don't think the NTUC represents the blue collar workers and rank and file workers. Actually, no, we actually represent all collars of workers, including the freelance PMEs as well. So we look after their interest and welfare, and besides being able to organize and encourage the union members to tap on this whole series of buffet of benefits that we have. For example, like if you want to pick a new skill or a program, yes, you have your skills future credits, but over and above that, we get an annual top-up, not once off, annual top-up of $250, and if you are a mature worker like me, you get $500 from our union training assistance program. You tap for short if you're a union member. So do tap on some of these benefits that are available. Likewise, if you go into, unfortunately, some disputes with your employer or your supervisor, and you need help and assistance, whether at Tripartite Alliance for Disputes Management or if you're a unionized company, you can look out for our union leaders and union representatives to get some advice on how to navigate and how to resolve some of your grievances and issues in the workplace, particularly now with the uncertain times. So do, if you want to find out more, do scan the QR code, and it will teleport you to the relevant pages for more information. And next month, like this month, we're going to have another useful topic. So do sign up and register to pick up some more useful tips, particularly in the area of fintech and financial literacy. We got some fintech experts to share a bit, and of course to chime in and in a way, sort of like a digital connect at Pioneer to share some pointers, as you can see, on financial literacy. And we're doing a series of it, particularly in this fintech era. So do join us again next month for Connect at Pioneer. And finally, before we all of you sign off, we want to get your feedback on how to improve on Connect at Pioneer. I know we have done a series of topics from wills and letters, lasting power of attorney, to matrimonial issues, to aquaponics, to handling good media habits, nurturing good media habits, and of course even on solar powering many of our facilities here in Pioneer. So do let us know what topics you hope to hear and see and watch from us, and provide your feedback. Your generous feedback will help us improve and do better each time we have our webinars. And on that note, finally, I'd like to thank Dinesh and of course all our community volunteers. This session is powered by a group of our Pioneer community volunteers. So they are behind the camera so you can see them, but a big thank you to them for making time this evening and for powering this entire Connect Pioneer series. So on that note, have a great evening, and please stay safe, stay healthy, stay strong, and stay united and stay together. Thank you very much.